Hi, I'm Sonny Kalsi. I'm the co-CEO of BGO. So as we sat here this time last year, I was pretty cautiously optimistic about the U.S., for example, right? The big issue with real estate, and I think there's a mistake that our industry makes a lot, is we think we're the dog, we're the tail of the dog. So what does that mean? The overall economy, what's going on from a macro perspective, that's the dog. We're the tail that follows wherever that's going, right? So if the economy's doing well and people have very positive sentiment, our sector does well. If it doesn't, our sector doesn't do as well, right? So I think what we need in the US is we just need all the noise to slow down, right? So if the worst is behind us from a tariff perspective, then I think it allows a couple things to happen. One, it allows the Fed to act, right? Interest rates are too high. They're too high on a real basis, they're too high on a nominal basis. It lets the Fed start lowering rates. If the Fed can start lowering rates, and if the wheels don't come off the bus from an economic perspective, I actually think the next couple of years could be pretty good for real estate. In every other cycle, this doesn't mean it'll happen this time. Every other cycle in the last 30 or 40 years where rates were high and rates came down and the economy was doing okay, real assets take off. And so we're primed for that here in the US. I think Canada is also primed for the same thing. Western Europe is as well, developed Asia, Japan, South Korea, et cetera. Everyone's kind of in a similar position, but that's what we need. We need a slowdown of rhetoric. We need there to be less noise. We need the central banks, and they've already done it. I mean, European central banks have cut rates already. It's part of the reason I'm a little bit right now, near term, more bullish on Europe than I am even on the US. I think we'll get there, right? So look, I can't tell you what the next 12 months are going to be, but as I look out 2, 3, 4 years, I'm actually cautiously optimistic. Yeah, I think what the administration wants is they want to even lower rates. I think you will see a lot of stimulation into the economy through lower rates. Very accommodative fiscal policy. I actually think that will supercharge real estate in the near term. We will have to pay the piper at some point. There's no free lunch, right? So we, the economy, taxpayers, will have to pay for that eventually over time. But actually, if that happens, if someone comes in after Jay Powell and they are more dovish and they cut rates very significantly, real estate's going to do really well. Yeah, look, I would say right now the market that we've been the most positive on, or where we see the most investor interest, has been in Asia. Now, if you think about Asia 10 years ago, people would primarily think of China. China's kind of very hard for global investors to invest in right now for geopolitical reasons and other reasons. So Japan's been the single biggest winner, beneficiary of that. The Japanese market, in our view, has probably been the best performing in the last few years. And I would say if I had to pick one market for the next couple of years, it would still be Japan. So Japan's been well performing. You know, South Korea, Australia, a little bit less so, but also for some of the same reasons. So they're doing well. Continental Europe is doing okay. You know, we're a big investor in Spain and Italy. We're very positive on both. Germany doesn't have the same growth as some of these other places, but it's cheap right now. And by the way, the best way to look like a genius in real estate is to buy cheap. Canada, look, obviously a smaller market, a little bit more insulated, but more protected, especially with the new leadership in Canada, I think is in a good position to do well. The United States is, though, the market that matters the most. It's probably 50% of most global investors' allocation, at least, and so they need the U.S. to perform. We need the U.S. to perform. I think it's behind those other places right now, but it could pass them all in the right kind of recovery. Why am I so bullish on Japan? First of all, what they've done a lot, they've really deregulated that market significantly in the last 5 or 10 years. It was way over-regulated. So the combination of deregulating the market, you've got world-class companies there, and effectively stimulating the market in a way where the property market can get going. You can go in, you can buy something, you can fix it, you can raise rents. Japanese companies are making money. Even with the yen as weak as it is, they continue to do well. People ask me all the time, why Japan now? It was over-regulated. I'm not saying it's under-regulated now, but releasing some of that regulatory holdback has unleashed the animal spirits in Japan, and that's why it's been great.